Hey, what's going on? Strat Soldier here. Hey, I got a special guest for you here. I got Steve Burns. Steve Burns, that's right. The man, the myth, the legend, the guy who actually got, I believe anyway, who put Rob on the map, Rob Smith on the map with the what do we know about price action? What do we know to be true about price action? All right. And that was introduced on New Trader U. And if you just even saw that article and followed him, you know that Steve Burns covers a ton of different articles and different trading styles. I'm gonna say it's about the strat. I'm gonna put the strat at number one, but he looks at everything else. He looks at Elliott waves. He looks at SMAs. He looks at the traditional point and figure. He looks at everything. And so it's awesome. He even puts out some free stuff about how to properly log your trades and lots of good information. So if you're not following Steve Burns, no matter what type of trading system you have, follow him. But he's here now, and he's going to give us some information on just hopefully some good stories about Rob Smith and the strat, and then hopefully go over some good tips on just trading in general. Not going to be a whole bunch of charts and stuff on this one, but it's going to be a ton of information. So get a notepad, get a pencil. Like I always say, successful people take notes. All right, take them notes. So if you can hear me out there, go ahead and let me see your screen. What's up? Oh, there you go. He's blinking.
All
There he goes.
right.
I always have to do my safety briefing first. If anything happens and the video cuts off, get right back into the link that we clicked on to start this thing. I always say every webinar with that. That's so funny.
Yeah.
Thank you so much for being here. Thank you.
Oh, no problem. I've followed you for a long time as well on Twitter. The Strat Soldier, the tanks, the cool charts and your numbers and your strat. Yeah, I really so it's pretty cool to actually see you in person. You are exactly what you look like on your Twitter, but I think I'm 10 years older now than I am on my Twitter picture. So
Well, we're a little bit older. Just drink water and don't take anything serious. I think that's my only secret. Well, thank you so much for being here. Seriously, this is awesome. Like I said, I've been sharing your article. What do we know to be true about price action? Rob's article, and for a few years now, since 2019, since I found him, because that's what got me to understand who Rob Smith was and what he was doing. Because I was trading, I was doing some other stuff, just learning how to trade. Period, and lost some money. It wasn't a ton. Looking at it back now, it wasn't a ton of money, but for me, that was a lot of money. Like I'm just starting this thing. Wait a minute, that was my first like big loss. And and I was trying to find like, okay, I got to find a coach. You know what I mean? In the army, we're always trying to find a coach. Try give me somebody that can show me how to do this. And not necessarily a shortcut, but show me how to do it. And I came across it was actually on Instagram, even though Rob used to do everything on Twitter, but it was on Instagram, and it was a bunch of candles, and and then like in the description, I was like, hit this article and read this article. So, and it was that one. What do we know to be true about price
wow.
action? And that's what got me into the strat. So I'm here because of you. So I appreciate it. Thank you.
Man, that is a really cool story because that's what I've always aspired to. I always aspire to inspire. I may not be the next big thing, but I want to inspire the people that are the next big things that do amazing things and either credit through my books or my articles or social media. That's really cool because that's exactly what I thrive to do. Yeah, that is the most fulfilling of all things, even beyond making money or being financially independent and my own success. But inspiring others, that's really, really cool. That article actually is one of the most popular articles in the history of NutriU.com, and that's out of 7,000 plus articles now. That's up there in the top 10 definitely. And at one time, it was the most popular, most shared, most read at one time.
That's
So that's really
awesome.
cool. I mean, brilliant title. And it was Rob's title and everything. It was brilliant that he did it. It was a lot of editing, man. Rob, he was a trader. He was not that I had to like. It took me a long time to edit it and get the images in there and edit what he sent me, but it worked out really well. That article actually inspired me to get Rob. I tried to get Rob to write a strat book to capture because he had all his YouTube videos, all of his charts. I don't know if you're familiar, Sarah. Sarah,
Oh yeah, Sarah
was
Strat
that she
Sniper.
yeah, she made the cheat sheet for the Strat. It was a great cheat sheet. It was like nothing like the traditional. What fascinated me about Rob was he did something different than the traditional candlesticks. The traditional candlestick patterns, their biggest edge is in just creating great risk reward ratios. And when the traditional candlestick patterns like the evening star, the morning star, and the reversals, they really have their power and risk reward ratios. When they're right big, but the
Yes.
win rate's not real high on the traditional ones. But I thought this was really cool because this was a whole different candlestick system and strategy to use. So, and with her cheat sheet and Rob's article, I got inspired and I asked Rob, if he would write a book, I'd go hand in hand. I'll write the
Yes.
chapters, I'll interview Rob myself step by step because he wasn't, we're not all traders, not all educators, not all authors, not all e-course creators. I mean, it's different skill sets
Yeah.
across the board. So I
Hmm.
told Rob, I'll spend my time and we will publish your book. I will do everything. I'll publish it. I'll do covers. I'll do everything. I just need your knowledge in the Strat to publish a book because that article needs to be a full book. And I want to know. I want to read it. I'm not a master expert by any means in the Strat. I want to learn it in detail.
Yeah.
So that the last about 18 months of his life, we were trying to iron out a chapters and the structure. And he was texting and calling and talking to him and writing him. He sent me up one of his sidekicks, and we are going to, get Sarah, see if we use her cheat sheet. We are going to do it, and never got through. Never. He's just busy. He's trading every day, all day, and the
Hmm.
gorilla was ringing the triangle and and his active trading, and it just never happened. And as like he passed away, so suddenly I was just so stunned. uh,
Yeah.
I never, how stunned I was. I was like texting with him like week before he passed away, and
Yep.
how sudden it even a social media post. So that was we almost had a Rob F. And he wanted to do it, and he was psyched up about it, but just so much work, and it just he just couldn't find the time to last 18 months.
Yeah.
But I think Sarah said she was going to write a book. You might know what happened with all that more than I do, or if anything exists like that.
Yeah. I don't know. As far as I know, I'm not sure, but yeah, I do remember Rob talking about that, and I remember him posting. I think it was just even a notebook, like it was just a regular like school notebook, like Rob Smith, da da da. Like it was just, it was like one of those like I need to take action things, so you just write down a sentence, and so yeah, that would have been amazing. And yeah, same thing.
Yeah,
I was working with Rob over at Scipio Group, and just texting him like almost every day, like because we work, like I said, directly with each other at Scipio Group all the time, and every day, and constantly in his room, always laughing about stuff. And then when we got the news, it was devastating because, but it didn't really hit me until I'd say 3 4 months later when. Wait a minute, there's not. I do know the strat and I do know what I'm looking at, but there's not that overseer going, Chevron's a piece of crap right now. Don't get in that. You know what I mean? It was just because you know it, but
yeah,
then it was
yeah.
different when
He had a lot of
it,
good filters.
yeah, it was different for Rob. It was different hearing it from Rob going, this look at this tight try right here. This is a mess. Don't get in there, and it was like I said, he was the big voice. He always said he always described himself as the guy in the air traffic control tower, like, I mean, just directing flights. And it was fun. And he made it fun. Even on inside days, he'd say, nobody trade anything. If you know what you're doing, do something. If you don't. And he would just tell stories. And he would like, if we called it the 7 layers of Rob or the 7 degrees of Rob, like Kevin Bacon, because Rob knew
Hmm.
everybody. If you didn't know Rob, if Rob didn't know you, you were nobody. So I was like, I'm so glad you know me, Rob. Because
He was,
yeah, yeah,
yeah,
he knew everybody and had pictures with everybody too. Yeah, very
yeah,
cool.
he was, he was in two. I met him, I think, in a Facebook group about, good gracious, 13, 14 years ago. He was in a Facebook trading group. He was in two trading Facebook groups. He was one of mine and another one that was a really high level secret one that very few people were in. And Rob was in with a bunch of different types of strategies. It was fascinating to see him interact with trend followers and swing traders and day traders. And it was fascinating because, like you said, he had somebody think they got the strat figured out. Okay, well, this is this signal. This is the number 1 2 2 1 or
Yep.
whatever it was. And he go,
Yeah.
no, you don't trade that on that chart. That stock is garbage. You trade it on on good
Yes.
stocks, growth stocks, and or whatever, well,
Yeah.
accumulation. And it was like he had filter. That's why I want to get a book where you could actually have appendix or something with the Rob's filters, what
Yeah.
how to because everything's just like my moving averages. People like, 5-day, 20-day EMA moving average crossovers like, oh, look, this is a moving average. Like it's a moving average in the extremely overbought territory. So, there's other filters, but I just one signal. I mean,
Yeah.
so he also had lots of filters, and there's so many. I don't think I ever learned, what all his filters were, and I thought it needed to be codified somewhere.
Yeah. Yes, 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 yes. So much fun. Yeah, he could definitely tell. I'll be in there on the power hour, and I use Chevron, but it was always a stock somebody had. Hey, what do you think about this? He'd go, yeah, that's cool, but the problem with this is, and he would say, look at this, look at the quarter, look at the month, look at the year, stuck inside,
Hmm.
doing nothing. I love. We've been laughing about Boeing since 2020. But Boeing has been stuck in this sideways trading for 4 years, all stuck in this mother bar in
Hmm.
the year. And people hate it when I start making fun of Boeing. But me and Rob used to laugh so much. They're like, you're going to make money in this? Look at this.
Yeah, my
So cool.
yeah, my Yeah, mine was Microsoft. And my group, people were like, why did you not trade Microsoft? They had a 520 crowd. Why is it even on your watch list for like you said, same thing. Microsoft went nowhere for, I think might have been 14, 15 years. I remember from like 2000 bubble and like it
Mhm.
never, like Intel and Cisco and all them almost went nowhere for, and I'm like, why are you not trading this on the crossover, the breakout? Because it's gone nowhere in 15 years. And it finally, recent years did finally turn into a Mag 7 monster stock. But yeah, like you increase your odds dramatically when you pick stocks that actually go up and trend over time. Or, like I guess the time frame confluence, I guess Rob was talking about. Look at your monthly chart, look at your weekly chart, look at your daily chart, see
Yeah.
if it's what the actual long-term trend is before you start trying to catch momentum on a lower time frame. I think that applies to other systems and strategies as well.
Yeah, exactly. Exactly. And I think what's also interesting is Palantir. Have you been looking at Palantir? Crazy.
Yeah, yeah. One of the guys in my group is all over Palantir, and it's very, very interesting stock. Did really well the last week.
We used to make fun of that one all the time too. I got video with Dan Urschman for the CEO from TrendSpider, and it was all joking, it was all friendly,
Mhm.
but I'm making fun of the CEO of TrendSpider because he's just buying in the Palantir, and me and Rob used to call it Palanturd. We used to call it Palantir because it just went to the lows, and now I just posted it.
Yeah.
I think it was last week, maybe week before. I said, Rob, because still tweet him every once in a while. But I'm like, hey, Rob, we can't call it Palantir anymore. But what would you call it now? But honestly, I think Rob would just look at this chart and go, nice broadening formation you got there. I think that's what he would honestly say. He's like, there it is.
Oh,
It works every time.
yeah. Yeah, there's going to be a whole chapter about the broadening formation. That was like his unifying theory of all charts. Everything's everything.
Yeah.
Everything you look at every time frame, you have a broadening formation. That's just how it works. I forgot. That's a good reminder of all that. I listened to that for well over a decade.
Yeah. Yes. Yes. Yeah. 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 So what have you seen since you posted that article and then like people just going through the strat and learning the strat and then after Rob's passing, what do you see as the strat community or just trading as a whole? Because again, you look at so many different trading strategies, and Rob always said the strat works on any market. But from an outside perspective, do you really see that, or is it just like anything else, just another tool?
I think actually the strat from the beginning, it's one of the things, the newest strategy with an edge. It's an innovative turn on taking both momentum trading and traditional candlesticks and creating a whole new strategy with it. So I think it is the newest and most innovative of all strategies, and it follows all the right principles. But about we're going to talk about the what makes successful trading system. I mean, it does follow those strategies: momentum, going in the path of the least resistance. I know Rob was big on cutting losers short, risk
Hmm.
management, believing in what you're doing, having executing your trading. That is your plan, your strategy. The strat gives you your strategy and your plan, and you just
Yeah.
execute it. I mean, it's pretty genius in all respects. I'm sure somebody's going to come out of the strat community and be somebody big at some point. Just a matter of who will that be, and will they have capital under management? Because I think he
Yes.
did spawn a whole new one of the best genres.
Yeah, yeah, yeah. And it's easy to teach too. It's easy to show somebody. And along with that is what I like the best about the strat is it's all quantitative. Like I can show we
Yeah.
can both look at Palantir and both see the same thing. Like, if in and I'm not trying to I'm trying to not dance around, but say it they're better than just say, these other trading systems. But I have to say it a little bit. Like if we're talking about SMAs, we got to talk about, well, it's really hitting the 9-day SMA as, it's really, it's by the 15, but then look at the VWAP, it's really here, but it's consolidating.
Hmm.
Like, no, I just have to say, here's actionable signals, time frame continuity, and where is it at in the broadening formation? And most stratters go, yep.
Yeah, that's the beauty of it.
Yeah,
One
it's
of the most
amazing. That's all.
quantifiable. And relies mainly on price. The price action, for the most part, it's a price action and pattern strategy. You're not,
Mhm.
you're not having seven technical indicators. You're not even having two. You're having just a candlestick. You have a candlestick pattern, price action, and an overall chart pattern. So it's pretty genius, the
Yeah.
incorporation of those things to create a simplified strategy.
Yeah, yeah, yeah. I like showing people the basics and then sending them out there and I was like, you can learn all that other stuff after you understand this. You can learn that other stuff. That's fine. But if it gets weird, you can always come back to the strat. That's
It's a
awesome.
good filter too for anything that becomes silly or foolish. You can see the filter.
Yeah, yeah, yeah. I always tell them, okay, yeah, this dangling participle on a handstand I was looking for. I'm not really seeing it, but I do see, I do see full time frame continuity to the downside. I'm just gonna cut this and then I'll try it some other time. That's so
It
funny.
is a good simplifier.
Yep. So, all the things that you've seen, all these strategies that you've seen, to include the strat, what's some of the common denominators of all the articles you post? Some really good ones too. What's some common denominators that just anybody, any trader, advanced or just beginner, like they should really grasp? One thing I like to retweet all the time is uh, losers average losers, and I keep Paul Tudor. I always say his name wrong, but hopefully I said it right this time. But Paul Tudor Jones, I like him a lot, and I know it's different back then, but the way he talked, it was very synonymous to what for the way we talk about in the strat. He talked about, how much, not how much money I can make, but how much money can I lose if I keep messing around with this thing? You know what I mean? How much money will I lose if I just keep being silly with this stuff? You know? And but things are different than back then. I don't know if you could I think you could trade the strat, but I don't know if you could trade the strat just based on how slow data came through back then. I don't know. I always wanted to get Rob on here and talk about the old days of how they used to trade because you used to be able to just make money on the spread. I hear about that all the time. Like people just like they hear price and they're just making money on and then it gets to this dollar. Yeah, it's weird, but it used to be different back then. That's all I'm trying to say. And he lived through all of that. So, um, some common denominators. I'm sorry. Let me get back to it. Some common denominators that advanced and beginner traders can just use in general. I'll leave it
Yeah,
there.
just a quick note to follow up what you said quickly. That's one thing. Paul Tudor Jones, they say, oh, technical now people that don't believe in technical analysis, you can't make any money technical trading, and even Jim Rogers, like, well, Paul Tudor Jones was a billionaire through technical trading as a money manager. He leveraged it to the hilt, and he was a technical trader. And then people go, Elliott Wave's just a bunch of foolishness and dismiss all of Elliott Wave. Paul Tudor Jones used Elliott Wave in 1987 to capture that crash and doubled the all of his assets under management in a day with leveraged futures. So to dismiss Elliott Wave out of hand and have Paul Tudor Jones, a billionaire, using it as one of the most
Yeah.
successful traders of all time, people need to open their minds. That's why I like to share across all genres. Which
Hmm.
with uh, uh with my studies, I've read you know 400 or 500 trading books, probably about 450 trading books, studied all the market wizards, the trend followers, the real-time traders, all the stats on the traders, and all social media, and looked at so many traders and all the historical successful, Jesse Livermore, Nicholas Darvis. So all that considered, and the math and my own, 30 years in the markets, here is the top five things for See, common denominators for what makes a successful trading system. So these are the 5 things. And like you said, a new trader, you learn this at the beginning, it'll make your path a lot easier. So the first thing is uh, quantified trade structured to create positive risk reward ratios at entry. And I think the Strat does this. When you enter any trade, any time frame, I don't care if you're a scalper trying to catch a couple of minutes or if you're Warren Buffett trying to buy a value stock to hold forever, you risk reward ratio, your upside has to be at least 2 for 1 on your downside. Some day traders might do 1.5 to 1, but you have to have risk reward ratio has to be positive. You don't want to risk your entire people that buy options risk their entire trading account to buy options that expire in a week. And
Yeah.
that's not a good because your risk is everything, and your reward is maybe it goes up 20%. So I mean, the main definition though for most people is your stop loss versus your profit target. And trend followers use trailing stops to optimize all their rewards. That's one of the biggest secrets to trend following. And I think a lot of the Strat does that too, up to
Hmm.
like whatever the broadening formations, upward trend, ascending trend line is maybe.
Yep.
But so the first one is you have to create positive risk reward ratios in whatever you're doing, at whatever from buy and hold investing to scalp. So, stop loss versus profit target at entry. I think that's the first one. Second one is the trade management after entry. You have to manage the trade. And like you said, you don't manage the trade by adding to a losing trade. You don't lose, like you get on the wrong side of it. That's how people blow up too. Get on the wrong
Yes.
side of it, goes against you, goes your stop loss, and you go, I'll just hold it. It'll come back. I'll just get back to even. It'll come back. I'm not going to lock in this loss. That's the proper trade management. So you
Hmm.
honor your stop loss. You have to be able to honor your stop loss once you set it, especially in a
Hmm.
strat. And you have to once you get to your profit target or it reverses on your trailing stop is hit, you have to lock in the profit. There's so many people, even investors in the .com that I knew that .com era, and me, I made a good amount too, but they didn't lock in the profits. I also took a big drawdown in the tech bubble, 2000, 2001, 2002. Uh, after March 2000, had a double top, but there wasn't a good exit strategy to lock it all in at some point. I
Hmm.
mean, from a long term, but you
Hmm.
have to manage your trade. You have to lock in your profits where somebody else does. And a lot of the buy and hold investors at some point are going to have their hearts broken by how much they get back at some point in the next few years. You know, but so
Yeah.
risk reward ratio, trade management. That's top two.
Trade manager.
But
Got it.
then this is the principle that very few people, it's for a higher level for more professional traders, that very few traders I've ever seen even understand this is the system has a positive expectancy over a series of trades. Your win rate and your risk reward define a profit factor, and it could be through your back testing of a strategy you haven't used yet, just to see if it does have a positive expectancy for back testing. It doesn't prove it's going to work, but if it doesn't work back testing, then the odds are almost 100% not going to work going forward.
Mm.
The other way to have positive expectancy is your own trade. You've traded strategy, you have your trading journal and your logs for your trades, and you see how you create your risk reward ratios, how you manage your trades, and you made money in the past. So you have a working system, and there's a positive expectancy. I'll be stopped out. I'll be stopped out 2 times. But then the next 2 trades, I'll make some money. It'll be more than how much I lost, but then I'll lose again. Then I'll make some money. And you just know your positive expectancy. I
That's
think the
good.
Strat
That's
does a good
awesome.
job of that.
I like that. I like that. I like that a lot. I always tell people, push your, because Rob used to do too. Rob didn't say the word trailing stop. He liked to use the word progressive stops. Like push your stops toward the price. Now that's either going up or going down. So I always say push your stops up, but then if you're trading down, anyway. So
Hmm.
I just simplified it to push your stops toward the price. If it's a winning position and it's good, push your stops up. If you're trading downside, push your stops toward the price because once it starts to reverse, or like Rob used to say, hold on, let me see if I got it. He's here.
Yeah.
Triangle layout, they will. Once Rob, once that happened, once you get triangled out, I mean, you get stopped out profit. Then the idea of getting stopped out means something different because before stopped out means bad. I lost money or I didn't make a lot. But once you put
Yes.
your stops up and you get stopped out, your brain goes, I just made some money. You're in the middle of your meeting going, ding, and then back to the meeting.
Yeah, you're
Yeah.
that's a total difference. A stop loss is a losing trade, but a trailing stop. When I say my trailing stop was hit, that's a winning trade. It sounds like, oh, your trailing stop was hit, but I locked in my profits and moved on. So if it reverses, I'm out. But yeah,
Hmm.
that's a positive expectancy. That's what so many psychology problems come in with trading is that you don't even have a positive expectancy. Some people just randomly gambling with no system, no strategy, no trade management, and it's just gambling, and
Yeah,
they have no positive. They don't know, and then I think then they're like some of their expectations are 100% win rate. You're If you don't win every trade, you're not a genius, and the
yeah,
worry and stress over every individual trade, like that's just the opposite. It's just like a baseball player thing. He had to get a hit on every single pitch or even every single at bat, and that's just not the way it works. Baseball players, .33, you're in a Hall of Fame. Their positive expectancy is to hit the ball about one third of the time, maybe a little less than one third of the time. That's their expectancy when they go up to bat. So they're
yeah,
not devastated when they strike out or get pop fly out or they have a hitless game. They don't lose all faith and confidence. That they know they've done their training. They know they've done the work. They know they're going to be successful. They know they can expect their batting average to be .300. That's just
yeah.
the positive expectancy ties so much into trading psychology.
I like it. Yeah, yeah. I always say the strat is it has that psychology trading psychology baked into the strat. Like it's all in there. I
Mhm.
like that. But yeah, because Rob always used to say as well, we didn't come here to lose. Like if it's working, if it goes in force and it's working, awesome. If it's not, get me out of this thing. I'm done. Get me out of this
Mhm.
thing. I don't. Hey, maybe there's a different participation group in there that's doing something I don't get right now. Maybe the buyers got what they wanted and I was a little late on it, fine. But I'm not going to sit here and get killed. I'm not going to do that. I like that positive expectancy. I like that. I'll start saying that a little bit more. I like that. That's good.
Yeah, it's the same. Yeah, that's what people ask me, like, because I'm mainly a swing trader. That's
Hmm.
exactly what you just said. Like, and like, you didn't have what did they call it? You have the belief in your trade. Like, I don't have beliefs in my trade. I believe in my stop loss, and it either works or it doesn't. I expect to lose, 35, 40% of the time. I expect that. And I
Yeah,
expect to have a couple of losing streaks. And I'm like you said, I'm not holding something to lose money and to hope it goes back to even. That's the opposite. I'm holding something so it goes up. I'm not
yeah,
doing this to lose money. And I sure the heck ain't going to sit here. Yeah, I learned those lessons long 25 years ago. I'm not going to sit here and hold a tech stock in late 2000. Like, well, it'll bounce. Intel's going to come back. It's a great company. Cisco's going to come. No, I'm going to stop out and go look for something that's actually moving. I think that ties in with the strat as well. Is you're
definitely.
just looking for momentum and price action.
Yeah, definitely. And if it's going to the downside, we're going to
Uh,
trade it to the downside. Speaking of Intel, I
yeah.
was me and JJ. They used to work with Rob behind his desk there for like 30 years at the CBOE. But we were laughing. We were looking at some charts trading live, and we were laughing because we were looking at Intel, and we were like, maybe Intel should be like Yamaha. You know how Yamaha makes keyboards and they make mixers. Maybe Intel needs to make some Intel air fryers that has AI and it talks to you and says it's done because they're not good at making semiconductors. They're not.
Yeah. They should have pivoted into something before Nvidia got going.
Yeah, yeah.
Uh,
They need to start making some Intel, I don't know, do something else. Intel keyboards, like I said, make some guitars, do something else.
yeah, Apple did a bunch of that the '90s. Apple had Apple T-shirts and all kinds of
Yeah,
Apple wear and all kinds of stuff. They tried when they started having struggle. Apple II got old. Uh,
yeah, yeah. What else you
the
got? What's number four? We went through those three really quick. Not in a bad way, but it's good information. I'm gonna have to edit this and put like one, two, three, like Sesame Street, because some of these people they don't want to. I like what you said about the difference between gambling and trading. I love that. That was great.
Number four, you trade a position size that eliminates the risk of ruin over an expected series of trades. So that's the biggest thing that I see where most new traders, most of us had like 50% drawdowns, at least 40% drawdowns blow up. Almost every new trader blows up because they have no concept of position sizing. But it's not even this position sizing in a vacuum. It's the position sizing to avoid the risk of ruin. Like, what is your win rate? And I have charts on this on New Trader U, and your win rates, and what's the odds of what your losing streak is going to be based on your win rate. Because if
Hmm.
you have a win rate of 50% or so, you're going to have five, six losing trades in a row. depending on how often you trade, out of every series, maybe 100 trades, you're going to lose five, six, 7 times in a row. So can you survive that losing streak is the question. So you have to
Hmm.
position size, and which is the biggest rule of thumb is, risking 1% of your account or 2% of your account. If your stop loss is hit, not position sizing. You can trade whatever size you want as long, like I think Rob liked this, trade big, but cut your losses quick. But
Yeah. Hmm.
so if you have $100,000 trading account, then you shouldn't lose more than $1,000 on the trade. So you could have and for depending on swing trading, whatever, trend trading. If you have $100,000 account, if you buy $10,000 worth of a stock, then you can have a stop loss at 10% of the price, which will be 1% loss if your stop loss is triggered. That's just an example. I mean, you could go, if you want to buy an index, you could take 100, I used to do that, just take the whole thing, $100,000 in the SPY, and your stop loss is 1%. But you could win, you could make 2 or 3% with the right upswing.
Hmm.
So it's the loss that's the key to look at, not the position sizing and not the stop loss. The stop loss should be really based on you start with your technical, whatever your candle stop out is, or your moving average stop out is, or your price action, or your support resist. You start there and you work from there to see what your position sizing would be, how much you would lose if that stop loss is triggered at that technical level. So it's sort of like a building blocks. But the key is you want to, if you lose 1% per trade, you have five losing trades in a row, you're down 5%. You just takes a 6% or so gain to get back to even, maybe less than that. But if you get down 20%, it takes a 25% return to get back to even. 25% returns world class performance, even for like Soros and Warren Buffett, its size, even Paul
Yeah.
Tudor Jones, those are good years for them, 20, 30%. But if you lose 50% of your trading account, you got to get 100% double to get back to even, which makes people trade even bigger, makes them go into futures, makes them go into options, penny stocks, and it usually leads to the zero drawdown, complete drawdown.
Yeah.
So you have to trade, your losses have to be enough to survive the losing streaks, and you have to know how big your losing streak is going to be based on your win rate expectancy, which could either be through back testing or through uh, paper trading testing or through your own trading records based on your strategy. So that's number four is position size to avoid the risk of ruin. And the bigger they trade, the more they ruin. That's what ruins most people. They have good strategy, they have a good plan, they follow the trading plan, they have good winning rates. They run their accounts up. I think we've all to run accounts up really good, really fast in the right market. And think, oh my gosh, I could multiply this, to this. But no, it's just that market fits your strategy. And the market one day is not going to fit your strategy. And you're going to lose money because the market's always changing. So
Hmm.
that's number four. Trading a position size that avoids the risk of ruin long term.
That's awesome. I like that a lot. That's very smart. I like that's very smart. And my brain is like there's so many gears. I have like I know what the next question is going to be, but I don't know just because you got so many good ideas right there. That's fantastic. I love it. And man, like I said, there's so many questions right there. Just that one thing. I think a lot of the traders that I see, if they just learn that one thing, they'll survive it. Like I
Yeah.
always talk about longevity. I don't want to like I'm here for a long
Hmm.
time, not a short time. You know what I mean? Like some people like to switch that, and that's fine. Some people are here just to trade just a few, and then they leave, and then they come back when they see the markets where they want, and then they trade a little bit and they leave. That's smart. But then you got those people that are like like you said, this is it. Who's that guy? Um, Stonks always go up. That guy. What? Come on, what's his name?
Was that a Barstool Sports?
Yeah, yes, that guy. That guy. Stonk
Portnoy?
Portnoy. Yeah,
Portnoy?
yeah, that guy. Stocks always go up, and I remember doing one of my first strat interviews with Benzinga, and I'm like, the stocks don't always just go up. Let's look at some charts. And
Yeah.
and it was just like I was still pretty new, so I was not I would say arrogant, but I was still pretty new. And but just to be able to look at these charts and go, stocks don't always go up. A lot of people I was getting people's attention just because like what I mean, it's completely goes against what other guy is saying. But this other guy, the Barstools guy, was posting I remember him just like digging in the bucket, pull out a T from Scrabble, and okay, let's look for some stocks with T, and he would just trade it and make money. But then he started again posting those videos of him, you know what I mean? And then you see him get more and more frustrated for 2021, 2022, when everything was just going to the downside. He was so mad. He's like he's screaming at the camera, don't call me when the market opens. Like if you know if you're with Rob or any other trader, you're waiting. You're like you wait for the first 15 minutes, let the smoke clear before you start smashing buttons. And this
Yep.
guy's like, "Don't call me when the open market opens." And you just see him get more mad. And now his entire trading, like the way he talks about trading, is completely different now. Now he says the market's rigged. They want you to see you lose. Like it's just and so that cycle, and we always talk about cycles too. You got some good charts I've seen about cycles because it's a circle, but that circle, if you turn it sideways, it's
Hmm.
a wave. It goes up and down. So this guy started going from the downside, went to the upside. Everything was awesome and everything's perfect, but that was the market. And then it changed, and now you have to change the strategy. And cash is a position. You don't, if you're not good at trading puts, you're not good at shorting
Yeah,
stuff,
man.
stay in cash. Just
Yeah.
wait. Just wait. But
Yes.
no,
Yes.
people want to
Preach
keep.
that. Action is not always good. Boy, and people, I mean, my groups are always stunned at how much discipline I have, especially when you get frustrated where something's going, something doesn't fit my system. Like, well, you're not in. Why don't you don't do this? Why don't you don't like that doesn't fit my strategy? And like, how can you have so much discipline and not to sit here and wait? It's like I learned my lessons with zeros on the end. I have no interest in jumping in and trying to win a lottery in the midst of, like you said, these crashes or and madness and when things even like I have like I love to buy dips and buy oversold charts. I have like strategies for buying the extended oversold and overbought and catching the reversals. And I guess for the strappy will be like the broadening formation when it finally goes
Yep.
back inside of goes back down into the triangle or up in the triangle. And I have systems for that. But once it goes out to I'll buy an oversold bounce. But if it fails and it goes back and drops under the oversold more, I'm out. I'm done. I'm not. That's a danger as it starts looking better, like especially for value investors or dip buyers. Like you're in, you wanted to buy low, you bought the low, then it keeps going down. It starts looking better. Like, oh well, I could add to this, and when it bounces back, I'll make it. That is the death
Yeah,
of so many
that's
because there are real bear markets. They do come around.
yes, yes. And that was 2022. Like it was just everything to the lows, everything. And I posted an old clip. I usually make clips of the weekend shift, so it's almost like a journal of what's been going on. And I posted a chart beginning of 2023, everything was trading sideways. And I'm like, if you just waited for the 2-2 reversal on the month, it started in
Yeah.
April. You got evidence, the buyers are really here. And we went back and forth with this other trader. It was a real good conversation, but it was just back and forth because you could have got in here, you could have got in there. But like if you lived it, you knew
Mm-hmm.
it was green one week and red the next week.
Yeah.
Green one week, red the next week. And it was frustrating. And so people think I say all that to go with your point. Just because my nickname's on a coffee mug doesn't mean I'm out here trading all this crazy stuff. People think I'm supposed to be like, well, you're the strat soldier, you do all these things. Like you see, I'm a tank. I trade commons. I'm gonna stay in one position and keep shooting it and kill it till it's dead. These machine guns, those are my options, and that's my future trading. I will take a quick little day trade, but that's not my main weapon. Like you know,
Yeah,
so
that is so true. Yeah, that's what that always looks so obvious in hindsight. Like a hindsight, I
yeah,
favor like amateurs. Like, just take the winning trades. Just don't just trade the trades that are winners. Why do you take the losing trades? Like they're so ignorant they think they're smart.
yeah,
But yeah, like at the beginning of 2020, like usually with those things, like you said, like I'll take a dip, it fails, then I'll sit there and it can crash. And like you said, the wild volatility of 2020, have to wait till the volatility settles down and the plunge is over, and then I start getting my signals whether they're breaking back over, lower third deviation Keltner channels or get back over the 30 RSI on a daily chart. Then I'll start getting back in, tiptoeing back in and getting back in after the storm is passed. I'm not trying to hold 2,000 point swings in the Dow. That's just not my strategy. And, I mean, that's a day, if you want a day trade, but even some day traders get caught on the wrong side of that stuff.
yeah. And everybody out there, what did he say? He said tiptoe back into it. He didn't say go all in and jump in this thing. He said start with a small
Nah.
position, and then as it keeps moving, build
Yeah.
that sucker up. Netflix, oh Meta. We used to make fun of Meta too. Meta's one of the I think about Meta because it was one of the ones that I just ignored because we made fun of it. Me and Rob made fun of that thing all the time. You want to change it? You want to change the company name from Facebook to Meta? Here we go to the lows, and it was in the dirt. It was in the dirt. But you can I'll talk about my webinars, or I'll show people charts. I'm like, yes, you could have bought right here at let's just make a dollar amount, 130. I'm making that up because I don't know it at the top of my head. But at 130 on this two-tier reversal on the weekly chart and held it forever. Now it's at 500, whatever. Yes. And I show people that as an example. And when I do that, I'm talking about common shares. I'm talking about common shares. I'm not talking about buying leaps and options. I'm not saying full port on things like that. I'm saying
Right.
start it. Now we can, like Tesla. You can make money with common shares, and I've started a small position in Tesla, and it was great. But nobody cares about the daggone robo taxi, Elon. Anyway, it's almost back to
Yeah.
where I got in at. Like it's just
Yeah.
like this thing is anyway. It's a small position, but I don't mind it because it's small. Like I'm not sitting here sweating. I'm not like staring at my charts, and we've all done it, and I've done it
Right.
too. But I'm not just sitting there
Right.
just like I need this to go up. You know what I mean? At least with
Exactly.
common shares, I can go, this is not working. I need to either reduce it or I just need to cut it. You know what I mean? With
Hmm.
options, you're like, I remember, I'm gonna let you go. I want you to get to the next point, but I remember some price action happening, and the person's asking me later on, like, okay, how do I swing trade this? Okay, well, okay, well, you do this and that. Okay, well, how are you trading it with options? Okay, it was zero DTE. You can't swing trade zero DTE. I'm sorry. That's not gonna work, you know.
I can sell zero DTE. Yeah,
Yeah,
that's
but
ah boy, I
man,
had some big years of options. And options got too rich for my blood. The older I got, the more they just got too rich for my blood. I had some great years and some great trades. It's like just a quick example, your example, like your Facebook. When Facebook went IPO, it was like I guess it was 25, I think. And I was telling the people I used to talk about investing, and I told them Facebook's going to be the one for the ages. This thing is going to be the next monster stock for the ages. And I was so bullish telling them like this is going to be long term, it's going to be a monster, people to buy it and hold it for a decade or whatever for investors. I'm not an investor, but and I was telling them like their business model is one of the best advertising platforms ever created, and that's what Google is, an advertising platform. So I tell them all this. So, and then they come back and see that, when IPO, it ended up dropping from 25. It barely got over the IPO, stayed there, and then it ended up going down. I think it bottomed at $12 or $13 a share back in the first year, or maybe the first 2 months. And they came back to me and said, "Wow, that just didn't work out at all, did it? You must have lost a lot of money." I said, "No, I actually ended up did not buy it, and I actually ended up buying put options, weekly put options, and rolling them for weeks because it
wow.
lost the IPO price, and that was my signal to go short." And I ended up I was into buying weekly put. They're like, "What? How could doesn't make any sense? You said you were bullish." I said, "Yeah, 10-year holding it." And I was right about that over time. I ended up being right about that too. But
Yeah,
how in the world do you short it? Because price action didn't confirm it. It did not trend up. It did not have I was going to wait for a 520 crossover on the IPO chart. That could be a signal off of it, even without back tested data. It never happened, didn't happen forever. But it did lose the IPO. Man, if you can't even hold the IPO price, you're in trouble. And I like you like added to that. I mean, and let it go. It finally reversed hard on me one day, and my trailing stop took me out. But I thought
good.
that was funny because like it's sort of like strat principles. I'm just following price action. I don't. I mean, I
Yeah,
can have whatever opinion I want, but I'm going to trade the price action.
yeah. I don't have my charts up. Hopefully this shows up on the screen. But I've gotten to the point where I'm showing people trend lines, and I'm not talking about
Yeah,
looking for breakouts. I'm not talking about triangles or wedges. I'm saying if you're new trading, take a trend line and just draw it. Draw the trend line with the price. Hopefully it shows up right in the camera. Is the price going up or down?
yeah,
What's the line doing? It's pointing up. That means it's going up. Is it going down? Is it doing this type of thing? Hopefully it shows up bright. I don't know what you
yeah,
guys see on the screen out there. But if it's going down, why are you trying to, you know what I mean? Well, it's on discount. You're gonna I tell people another thing too, like get rid of that stupid idea the price is on discount. Get that out of your head. What's the best losers win? It's written by this German guy. Anyway, he talks about trading DAX, and that's the title of his book. And he talks exactly like Rob, and he's just talking about price action as well. It's like stop trying to buy this stuff as it's going to the lows. Quit.
Yeah, that's what even like I mean you'll be a value investor, that's a whole different game. That's not trading, that's value investing. And even Warren
Yeah.
Buffett, when he finally steps in, Warren Buffett's buying stuff that's so darn low, like Goldman Sachs at the peak of the financial crisis, that's low. And if I'm buying things, even like what you're saying, even your principles, the strat correlates a lot with trend followers. You just described like Ed Seykota and the trend followers. What you described, is there a system? Like look and see what's going up and what's going down, quantify
Hmm.
it, trade it. They just quantify. So it's a good correlation. But same thing, even when I'm buying the dips and the reversals. I'm buying, like you said, I'm buying it after the dip happens. I'm letting the knife, I'm not catching the falling knife, let the knife stick in the ground, then let the knife go
Ooh.
back up over, like you said, that trend line. And when the
Mhm.
knife's going up, flying back up off that trend line, like you said, that's a perfect another analogy. I'm sure, like I guess would be within the broadening formation,
Yeah.
the
Yeah.
bounce on the broadening formation, the lower descending trend line of the broadening formation probably be the signal in the strat. Um, so yeah, so a lot of correlations, a lot of great principles, like you said, embedded within the strat. But the fourth, I mean, not the fourth, fifth, the fifth thing that the common denominator for what makes a successful trading system is the discipline to follow the system. The weakest part of any trading system is the trader.
Ooh.
If you have to be able, you have to have the discipline to execute your strategy, your system. If you cannot execute it, then it's meaningless. The purpose, and that's another thing. It's funny. You can have all those other four things, and then you get to and when you get real money at risk, people's entire physiology changes. And when they're losing money, it even changes worse. And crazy, when they're making money, it changes where you start getting a more less risk averse. You want to take on more risk when you're winning, but then when you're losing, you want to take on more risk because you want to get back to even, get your capital back to even. And the physiology involved in trading is very fascinating. People get locked in the same kind of thing the gamblers get into, and they get on tilt where their ego steps in. They don't want to lose any money. They have to make it better. They go off their system. They just start doubling up their size, trying to get back to even. So like that, the last part of the formula is the trading psychology that you believe in your strategy, you believe in your system, and you have the discipline and the faith in your strategy to work out long term and yourself to execute it. You have to have faith in yourself to execute it with discipline consistently and keep your risk down because you can be mentally ruined too. If you trade too big and blow yourself up, you can ruin your own trading psychology where you no longer even trust yourself to execute it because you're like a gambler at the casino on tilt trying to get back to even, get back to even. And you don't want to take your stop loss because you don't want to be proven wrong and like totally misunderstand the whole strategy. You have to think like a casino with table limits, a positive expectancy. You have a mathematical edge over the players. You just let the players play. The players can get up or down, but they're going to end up giving it back to you because you have a mathematical edge built into your system itself with bigger winners than losers on average over time. So that's how the trading psychology is the last piece that you just bring it all together under that. And those five those 5 areas you can spend a long time studying and mastering those, but you can check them off. You can get one of those mastered. I'm just going to repeat the five. Put it up on the screen after the video, whatever. Here are the five common denominators for what makes a successful trading system. Quantified trade structured to create positive risk reward ratios at entry, trade management after entry. The system has a positive expectancy over a series of trades. The win rate and risk reward define a profit factor for you. You trade a position size that eliminates the risk of ruin over an expected series of trades, and the discipline to follow the system. The weakest part of any trading system is the trader.
That's fantastic. That's a clip all in itself. That's fantastic. Wow. I'm telling you what, Steve, I could do this for hours. You're fun to talk to.
Yeah, that was a good chat. I can talk to a strat. I don't first time I've actually talked to a strat guy for any length of time,
That's
besides
awesome.
Rob.
Yeah, yeah, yeah. That's pretty cool. I'm glad I'm number two. That's pretty cool. Yeah, yeah. This is so much fun. I can keep going for hours and hours and hours. But uh, just because just talking to another trader that's been through the price action, that's seen the charts, that's done it all, made the mistakes, and then seen, because it's awesome. And it's also fun to talk to someone who's still doing it. I started trading back in 2019, and there was a whole nother group of people out there on Twitter, and I'm using Twitter, but there was a whole nother group of traders out there, and then now they're gone. You never hear about them again. Same thing with
They're gone.
2022. Everybody's like, "Oh, this is the dude. He's the smartest guy ever." You're dumb because you're trading the strat. you know, but and they're gone, and they're disappeared. Now, if I ever disappear, you'll see me driving around in a Lamborghini with Hello Kitty all over it. There will be signs, but anyway, no, I'm just saying. I'm just saying. There's those five things. I love it because those five things that's what makes a real trader or investor profitable and be able to survive the ever changing markets. I know that sounds very. You're going to hear that on every other YouTube video or every other. You can turn on Bloomberg and you'll hear that same statement, but it's true. Like the way it was in 2022 was not the way it was in 24 or is in 24. In 23, you cannot compare to 2019. You can't. They're totally different. There is bull markets and bear markets, but how things trade, there's only good three ways anything can trade. But I'm with the Strat, but I'm just saying the way things are in the market and how it's just nuts. I remember we never talked about jobs reports back in 22, 21. Never. Rob never talked about
Yep,
CPI. We never talked about
yep,
inflation. What?
yep,
What's that? Who cares? Right? But now
hmm
the entire
hmm
market's hanging on every
yep.
number, every word. Well, and then we have those things. It almost feels like earnings because it's like we got the number we wanted, we got a low jobs report, and it gaps up, and then just crap all day long, the rest of the day. Because the buyers got what they wanted. Well, everybody
Yep.
expected that number. And maybe you can explain to me right before we go. Maybe you can explain to me a phrase that I hear all the time, and I hate it so much. It's priced in. What does that actually mean?
Well, that goes back to like they think it's efficient market hypothesis, where the what was it, the Nobel laureate wrote that everything's priced in, everything that's known is in the market and it's efficiently priced in, which is absurd because people will trade the wrong ticker symbol and it'll rocket up, and people think the I know what a good example of that. People think Zoom is it's ZM is one ticker and Zoom is another ticker, and they think it's the same one, so they run the wrong one up. So obviously the markets are not efficient, and the pricing in it's really the way price action works is is that it's all about what everyone's doing. There's holders holding. What are the holders sell? What are the people on the sidelines buy? And what everybody's doing at any given time is what it all comes down to. And that's what price action shows you, filters through all that. So there's no reason for all the narratives. But it's really funny how like the unexpected is what really drives markets, and like expected doesn't really drive. And everything they're expected, they think that everyone that wanted in's already in, everybody who wanted out's already out, and then we got what we expected, so nothing happened. But you start getting into mental gymnastics with that. So like that's another beauty of the strat. It filters for all that. You just watch the price action.
Yeah, yeah, exactly. It's like I hear on the news, Intel's finally making these air fryers. It was a joke, and now they're doing it, and it's in the pre-market. It's up $10. Okay, fine. Let's go look at the charts. And I tell people too all the time, like you hear about a stock in the news, and they're talking about it. Okay, I'm going to show you how to look at charts. What is it, green or it's red? I'm not even talking about reversals or nothing. Tell me on the screen, is it green or is it red? Well, it's red. Red means selling, right? Yes. They're not wait till they start buying it. I don't care. Wait till they
Yep.
start buying it. So that's amazing. Yeah, yeah, it's priced in. So I appreciate you clearing out that one up because I never could find a definite
Right.
answer on that. Thank you so much. I could do this for hours, but I know you got a limited amount of time, and I want to respect your time. So thank you so much, Steve Burns. I'm going to keep. I've shared that article. What do we know to be true about price action? I've shared it so much. If I had a nickel for every time I did it, I probably have $35.80. Anyway, the nickel doesn't go too far. Um, Thank you so much for being here. Any final words, and where can we find you?
Yeah, anybody interested in the profitable trading principles, you can follow me at S Joseph Burns on X, formerly known as Twitter. If you want to go deeper, way deeper in all this stuff, I did go through the effort and time to create e-courses on newtraderuniversity.com. So that's a lot of work. I hope people have seen to enjoy that. I have a new one, Trading Psychology, first e-course I made in 2 years for like people want to go deeper into the psychology of your actual trading. And I also blog at newtraderu.com. So I have a lot of articles like you see come out on my social media. I share the legacy art. I think I've written 4,000 plus trading articles on newtraderu.com. So you can search almost any topic you want. It's like the Investopedia for traders. So, yep. And that's, yeah, my username's the same across platforms. So that is where you can find me.
Thank you so much. Thank you. This is awesome. This was amazing. To say thank you so much. Thank you for the stories from Rob. You're amazing, and we're gonna keep Rob's legacy alive by keep trading the strat and just keep him out there and keep him alive. You know what I mean? Once a three, always a three. Can't not be in you know. How can you not say that and then giggle and you know and have fun just trading. So thank you so much for being here, Steve. And that's it. That's all I got. I appreciate it. Thank
All
you.
right. Yeah. All right. If you have anybody write a strat book, let me know.
I will. I will.
Okay.
I'll talk to you
Have a,
later.
have a
See
great
ya.
one. See you.
All right. Thank you so much for being here. This was awesome. Thank you so much. This was fun. This was really fun. Thank you for everybody. Go check out thestratsoldier.com. That's where you'll find all my courses, the Strat Execution course, the Strat Trade Checklist course. All right, and you'll find coach one-on-one coaching sessions. Conversations with me and you, trying to develop what works for you and help you with that. And also, I got the Strat Camp webinar as always. All right. So go check that out. Thank you so much for being here. I'll talk to you guys later. Peace. You still out here, Steve? Did he leave? Oh, he left. Okay. All right. Thank you so much. Bye.